the way we look at it is deleveraging, shareholder returns, capex for growth. And these are the three items on capital allocation that are very critical for us. And I think that's the basis that you see that deleveraging continues. We will continue to focus on the first 1 billion, and then we will look at what are the other opportunities to bring it down, because we certainly want to bring the gross debt down to a lower level than where we are. And that is a multi-year process. It's not just a target, it's a multi-year process. And then to look at allocating more capital for growth, because we have an exciting pipeline of growth, and we would like to ensure we come out of this phase of growth in a very strong manner. So I think this is an opportunity that we would not like to miss. So it's a balancing between deleveraging, growth, and as I said, shareholder returns.
Sure. In that particular order, I'd want to talk about the capex plans then, because it's been at 105 billion rupees for this financial year. What is the number that we're looking at for FY23? And which are the areas or which are the units which will undergo expansion?
So, so this year's actual capex is within the guidance that we had given. I had spoken about it earlier. During the financial year, it was between 10 and 12,000 crores. We've completed it about 10.5. I think this year we are starting with a 12,000 crores initial guidance, and I think we would be looking at reviewing it based on how the first half goes, because whatever allocation we are talking about at this point of time is good enough for the first 6 months to spend. It will take possibly longer, but we have, as I said, an exciting pipeline of growth. The first one is the priority to complete Kalinganagar growth, so that it becomes an 8 million ton complex from currently 3 million ton complex. We were implementing the critical parts which were margin expansionary, for example, the cold rolling mill, because we already have the hot strip mill available. And we were implementing the pellet plant, which is also saves significantly on the cost. But we will have to focus now on we are looking at focusing on the volume growth and allocating capital to complete the blast furnace and the steel making and so on. So based on, I think the starting point is 12,000 crores of capital allocation across the group, Tata Steel consolidated. And when we finish the first half, we would be in a better position. We'll have a look back on how we have implemented the first 6 months and how the underlying cash flows are. And based on that, we will have a conversation with the board to see if we need more allocation to complete those projects on an accelerated basis. I think the whole push on capital is fundamentally on ensuring that the time to spend is optimized and the pace to spend is accelerated so that we can get to the growth